Good afternoon, everyone. Joe and Brian here from PTP. Hope everyone's week's going well. Today we're going to focus very, very heavily on the JobKeeper payment. We know that there's been a lot of questions that we're getting from clients around this. We've had some great questions from before the webinar today, so we'll answer them at the end. Thanks to those who sent those through. But it's really going to focus largely on this JobKeeper stuff. Please feel free to ask questions about that on the way through. But also, if you have other questions around this COVID stuff or any of the other government support, please don't hesitate to ask about those as well. More than happy to take any questions. And like we have other times, we'll continue to answer them for as long as people would like us to. Even if that goes past the hour, feel free to jump off if we go over time. So again, just to repeat what we've said over the last few weeks, this is all about, I suppose, getting through this together. The reason we're running these webinars is to try to ensure that people have got a forum to discuss things, put questions out there, see potentially other questions that other people are asking, because we've probably all got similar sort of questions around some of this stuff, and seeking to answer them as a group and provide support to our client base and to the business community generally. Again, the key thing with this stuff is communication and asking questions if you're not sure. We're all learning. This is all new to all of us. This is unprecedented. That's a word that's getting used a lot in the media at the moment. So it's difficult to learn on the go, and they're changing things as they bring them in as well. So it's changing day to day almost. So ask the questions. Try to stay as calm and as rational as possible and use the data you've got to make these decisions. You can only do what you can do. You can only make decisions with the information you've got at the time. So use us. Please feel free to ask us at any time outside of this. Don't feel like you need to wait for these webinars weekly. Get in touch. We'll certainly try to provide as many updates as we possibly can on the way through, and more than happy to have a chat at any time, but it'd be about a question or just a general event or a chat. I'm happy to support. So without any further ado, we're moving to this JobKeeper payment. Just a bit of housekeeping. Brian and I today we're going to make things a bit easier by removing our video of ourselves when we get into the section. Probably make it a bit more pleasant for people as well, not having to look at our heads. I'll speak for myself there, but the other housekeeping. If you want to ask questions, it's down the right hand side there. You can probably see that in the chat column. You feel free to minimise that if you're not using it, to make the screen bigger to be able to see all this writing that's on there. We've tried to keep it as minimal as possible. We don't want to be filling you up with writing and heaps of slides. There will be some notes that will be handed out and some other things that come out as part of this presentation as well. So please try not to feel overwhelmed. There's a lot of information here. A couple other things. If you lose connection, just refresh the page. Internet at the moment anywhere is a bit patchy with everyone on it, including school kids now. And a copy of the slides and notes will be sent afterwards, and they'll be available in the Google Drive and on our YouTube as well. I think that's about it on that front. Moving into this, before I go over these things we're going to cover as part of the JobKeeper payment, just a couple of other updates on some of the other things that we've run through over the past couple of weeks around the government measures. So we'll run through one example just around the ATO and what we're seeing there and what Brian and I are both seeing there, but also just a quick update on that Victorian $10,000 grant for small business that's open to businesses impacted greatly by closures and meeting certain wages tests and turnover tests. We're starting to hear people getting paid that. So if you have applied for it or you're thinking about applying for it, please do. It sounds like they're trying to get that through as quickly as possible. It is being paid now. So keep an eye out for it if you have applied for it. If you haven't and you do, you think you're eligible, either touch base to talk to us about it or go and apply directly. The links will be in the stuff we've provided over the past couple of weeks. If you're not sure what we're talking about, again, ask. Happy to discuss that. Brian, did you want to quickly run through your scenario with the ATO?
Yeah, but just on the on that $10,000 grant, Joe, that is a big update from last week, because I think when we were asked the question and we were talking about it, there was an expectation we wouldn't see anything happen until when grants closed. So obviously, if it's starting to be paid now, then that's not the case. So, yeah, as Joe said, if you haven't put in your application for that one and you're eligible, get it done ASAP. And if you're not sure, talk to us. But yeah, going back to the ATO, I've had a few discussions with them this week, and I must say it's been really pleasing to, I suppose, see the approach that they've been taking in the discussions I've had. They've been leaning over backwards to be accommodating in putting forward together deferrals of payments, new payment arrangements, and even going as far as deferring if you happen to have a super guarantee payment arrangement in place. They generally say that they can never override those. I had discussions this week where the gentleman I spoke to turned around and said, well, let's be realistic. If you haven't got money, you haven't got money, so how are you going to pay it? So he also cancelled the repayment plan on the super guarantee one off until the middle of September, and then said get in contact with us at that point in time. Let's see what the world looks like then and negotiate some new terms going forward. So he was also putting off a March BAS and also a June BAS that were not even there, already deferring them before they've been put in place. So very interesting to see. And I did note that the gentleman I spoke to was out of the legal department. So he was now stuck in debt processing and not very thankful for it, but it's obviously all hands on deck at the ATO to get through all the queries and deferral requests that have been put in place. But overall, yeah, I'm giving it a thumbs up at this stage for being so accommodating.
Yeah, great. And I had a similar story to Brian yesterday with the ATO, very accommodating, and not a lot of requirement for asking for any assistance other than to say that the client was is experiencing some financial difficulty due to COVID-19. And again, same thing, deferred immediately, the offer of deferment and no payments, no general interest charge, all those sort of things put on the table immediately until mid-September. So, yeah, I suppose the message we put across there is if you're not sure about that and you have got some debt there and you're going to accrue some debt that you're not going to be able to pay, get in front of it. They're not going to. There's nothing to be scared of. They're more than accommodating. So just keep that in the back of your mind. Okay, cool. So they're probably the two major ones. There's not been many other major updates other than Tom. Did you want to just touch briefly on that Vic rent?
Yeah, I'll touch briefly on the rent side of things. We obviously last week we saw commercial rent and a code of conduct being introduced by the government, and we were more hopeful that this week we would see some more things happening in the residential rent space to provide some clarity. But at this stage, Daniel Andrews has come out and spoken in Victoria about a rent residential package that he's introducing, and that was fairly limited, I suppose you could call it, in that I think offhand it was maybe a $50 million package, of which 48 million of that was going to be handled by reduction in state taxes and things that they have control over. And there might have been 2 million or something left that was going to actually go towards helping tenants. And then within that case, the tenants had to pass some pretty strict criteria, and then the maximum they'd be eligible for was about $2,000. So I don't think there was a lot of big news that's going to help a lot of people or feel confident in their situations out of that. So all we can do is stay tuned, but it really seems to be an area that certainly the federal government doesn't want to get involved in, and hence it must be a real struggle in trying to come up with anything that can be a consistent type rule across the board. So I think it is going to fall back to state-based things, and unfortunately it's probably going to get a little bit uglier in that space before it gets any more clearer, with different talks of people even going on rental strikes and that sort of thing. But from our point of view, it is still recommending, if you're a landlord or a tenant, reach out and talk, start the conversation, because there is outcomes that everybody still wants to really have their tenant, and somebody wants somewhere to live. So reach out at either end and come up with something that can be agreed upon to move forward. That's probably all I've got on that, Joe.
Yeah, definitely. And it's just, it just comes back to that communication thing, doesn't it? It's really just about being proactive in the communication. And no one wants this situation. Of course we don't. But we're stuck with it. So make the most of it as far as, or do the best you can with the situation you've got, and talk and get on top of it on the way through. It pretty well applies to everything that we're going to talk about today and everything we've spoken about in the last few weeks. So. We might just remove our cameras now, and we're going to start on this JobKeeper stuff. What we're going to cover today is what is the JobKeeper regime. We covered that a little bit last week, but it's probably just got a bit more detail. We have got a bit more detail around that. We knew the bill got passed on Wednesday night last week. We had the bill itself, but we didn't have any instructions or anything as to how it was going to work. In practice, we now have a lot of that. It's still changing a little bit. There's still some things to be ironed out, but it's a lot clearer now. So we're going to run through that. Entitlement and eligibility for employers and employees. Of course, you've got the two parties here, and it'll become clear that there's responsibility from both sides on that as we step through this. Registering your entity and confirming eligible employees. Eligibility for self-employed persons. So when we're talking sole traders, partnerships, companies with where directors or shareholders don't receive a wage, and trusts where they receive distributions. So we'll talk through that. Integrity measures. So the ATO have got the measures there to scare the pants off people, to try and to ensure that people don't do the wrong thing. Essentially, and that's just basically to say, well, look, if you manufacture something that enables you to get this, we're not going to be too happy about it, and we're probably going to come down very hard on you at that point in time. So we'll run through those because they are very important to keep in mind for obvious reasons. And then we're going to step through the key actions and how to apply over the next week or so. And there's a couple of steps there because there's the initial enrolment part. We've already done the application bit, which is the application for information. There's the enrolment to the employers, and then there's applying on a monthly basis to actually get the JobKeeper on the way through. So there's a few things we're going to run through there, and then we'll do a Q&A session at the end. Again, keep in mind, I'm sure most of the questions will be about JobKeeper, but if you have other questions about the other support or anything generally, please feel free to post that in the comments as well, and we'll do our best to answer them. Okay, moving on to what is the JobKeeper scheme. So it's essentially, this is stuff from last week. It's made up of eligible employers and eligible employees. Eligible employers payable to eligible employers. The JobKeeper is payable to eligible employers and non-employer businesses, i.e. the self-employed entities that I went through before, who have requisite decline in their turnover during the relevant period. Now, for most people, most of our clients, that's 30%, 15% for charities or not-for-profits, 50% for groups to turn over $1 billion. So that's a big end of town sort of stuff. So most of it's 30%. Eligible employees, of course, eligible for a subsidy payment of $1,500 gross before tax per fortnight for each employer who is employed by an eligible employer. So entitlement and eligibility. So we're going to just step through just briefly. So as we said, there's two sides to this. There's the employer side of it, and then there's the employee side to it. And then the ATO have also provided some really clear guidelines around the fortnights, how the administration is going to work. So we've given us this calendar here, which basically steps through and says, okay, the JobKeeper is broken into X number of fortnights that are paid over the period from April to September, and the JobKeeper will be paid monthly for each of those, with eligibility determined on a fortnightly basis. How much is the payment? This is some of the stuff we just covered off on there. So it's $1,500 for an individual at a minimum for an eligible employee. When must the payment be made? The Commissioner will make the JobKeeper payment if it's satisfied that an entity is entitled to do so. May also pay the amount if not satisfied in the first 2 fortnights. So broadly, the ATO is talking about the first payment being made. I think it's within 14 days. Well, there you go. The next one says that within 14 days after end of month. The ATO has indicated that that will be in the first week of May, and it'll be as quickly as possible after people have lodged their applications for receiving the JobKeeper. It's no later than that. and we'll step through briefly the other bits around what the requirements for the employer to actually physically pay the employee in the meantime, because of course we know that we're being paid in arrears here. So it's being paid in May for amounts that were due in April. So we'll step through that.
So just on that one, Joe, well, we might just
Yes.
talk a little bit further on that previous slide there with that payments to be made. Just go back one more slide. Just highlight where in the month of April there, they've put some different colours on the 12th of April and the 26th of April for those fortnights. And that's because they're using a slightly different methodology for, I suppose, your eligibility for those fortnights.
Yeah.
They've tried to be very strict in that it's very much a fortnightly eligibility test as you go through. So you need to have paid your employees prior to those dates for those fortnights to count. But because of April being the first month that's really coming in, there's the enrolment, registration, the confusion, everything else coming into play. They're sort of looking at that and wrapping it up together to really say, well, okay, in order to reimburse people for being paid for the month of April, they're willing to just make sure that people have been paid prior to the end of April, and they will count those in.
Yeah.
Then moving forward, though, their expectation is people are getting paid within the relevant fortnight in order to be reimbursed for that.
Yeah, exactly. Of course, and we'll cover that off a little bit later. But a slight difference if you pay on a slightly different cycle to fortnightly. There is some rules around monthly payments and how that works. So we'll step through that if that's applicable to your business.
Yep.
But yeah, essentially it's allowed for back payment, as Brian said. It's because I'm designing all this stuff right through until last week. So who knew what actually had to happen? No one knew for sure. So okay, we'll provide some leniency for this month. But then going forward now, we should all be very clear about what needs to happen. So therefore, there shouldn't be any issue with paying that amount to the employees and meeting that requirement.
Yep.
Is that all you wanted to cover off on there?
I was adding to that one, Joe. All good.
Great. So you can see here down the bottom, maximum payments for eligible employee over the period of time that we're talking about here. So from essentially the end of March to September is $19,500. So 13 fortnights times $1,500 gets you to $19,500 per employee over that period of time, and that's the sanction period, that you agreed period at the moment. The ATO, the government have said potentially they will look to extend that, of course, depending on what the situation is with COVID-19 and what's happening with ability to get back to work and get back to business as usual. Okay, so basic requirements, entitlement to payment. So do you want to run through this part, Brian?
Yep, that's fine. So the employer is eligible on or before the end of the fortnight. So they run a test, or I'll go further. The individual is also an eligible employee of the employer for that fortnight. And the employer has satisfied the wage payment conditions and notification requirements by the due time. We'll go more into that shortly. And the employer provided information to the commissioner in the approved form. So we'll talk more about that. There's essentially a test that they're applying each fortnight, which sounds a lot more onerous than it is, but it's really just mean that employee needed to be an employee at the 1st of March and pass all the tests. And then during that particular fortnight, they really need to have been paid the required amount of money and pass the other things they need to in that particular fortnight. Otherwise, the employer won't be entitled to look for a JobKeeper reimbursement for that employee. So they need to pass those things.
Yep, and that's the fortnightly eligibility we're talking about. We'll cover off on, and the eligibility for the business hasn't changed too much around turnover test, production, turnover, and being in business and that sort of thing. But we're talking about here specifically basic requirements for entitlement to payment on a fortnightly basis. And you can see that at the bottom, important, an employer must determine eligibility for each fortnight. And as Brian said, I think as we step through this, you'll see that, that does sound like a lot, 13 times, but essentially once you've done it once or twice, it should pretty well flow through, assuming no major changes happen within your organisation. All right, stepping on to the next one. Okay, employer eligibility, which entity is tested for the declining turnover? So this is one of the key things that we wanted clarified last week, which was around how do we work out if the turnover has declined? So that 30% test, how do we work out if that's happened or not? And if you're not a standard business that has regular turnover and can measure that, so you're a seasonal or lumpy type or a new business or any of those sort of things, what happens there? Now they've provided some more detail around that, not as much as we'd like, but they have provided a fair bit more detail. So we'll come to the tests outside of the standard in a minute, but which entity is tested for the declining turnover? It's based on an individual entity by entity. So group turnover is, so the 30% bit under $1 billion, that's based on group, everyone within your group. So that's every entity that's included in there. But once you get past that point in time, and once you get past that test, the declining turnover, so we're talking about the 30% declining turnover now, looks at each employer entity separately. So if you're employing people in 2 or 3 different companies, they're not grouped all together and looking at the turnover. They're grouped. They're assessed separately. So turnover. So you may have in that scenario, you may have a company that has had very little or no impact, so it's not eligible, and you may have companies that have had impact that will be eligible for JobKeeper. So it looks at each employer entity separately. There are no grouping provisions. So it's I said before, even if they're related entities, for the purposes of looking at declining turnover, they're not grouped. They must separate a part of a GST group. Single entity rule does not apply for tax consolidated group. So really we're looking at it and saying, okay, for whatever the entity is, whether it be company, trust, partnership, sole trader, whoever's employing those employees, that's the turnover for that entity is the one we look at for the declining turnover test, not for the whole group. Anything you want to add there, Brian?
I was just going to say, Joe, so when we do look at it in aggregate, bringing it all together, we're only determining whether it needs to be the 30% or the 50% we need to pass.
Yep.
And then once we've learned that, we take that down to individual entity.
Yep. And that's again that 1 billion level of turnover for before you've got to be over 1 billion in group turnover before you've got to reduce by 50%. So again, most small businesses fall within that less than more than 30% decline in turnover.
Yep.
All right, declining turnover test. This is what we're talking about here. We're not going to focus too much on those ACNC registered charities. There is a different threshold for those, but they're not that prevalent within our client base. So it's not something we're going to focus too much on. Suffice to say, we're happy to take questions on it if it applies to you. But yeah, less than 1 billion, the threshold is 30%. So your turnover has to have declined by more than 30%. And we're talking about here that they've made it clear. We're talking about GST turnover. So basically, what we're putting on our BAS as our turnover or our taxable supplies during the relevant period falls short of the current GST turnover for the comparison period, and the shortfall equals or exceeds the specified percentage for the entity. So, in simple terms, has the sales that you've put on your BAS reduced by more than 30%, or for the comparison period? Is the question we're asking here.
Yeah, so we'll talk more about the comparison period shortly, but just to identify our GST turnover, it's not just exactly what goes on our BAS, it's actually the test that we apply for what forms our GST turnover when we originally applied to join the GST regime. But let's say if you were in business and you sold a lot of capital assets, big capital items as such, and that's not an ordinary part of your business, then that actually falls outside GST turnover.
Yeah.
So it's not to be confused with you still need to pay GST on it, but when we're trying to calculate a turnover figure, it's actually taken out of that. But once again, as Joe said, for 99% of our clients, we're well under the 1 billion mark, so we don't really need to pay too much attention to that one.
Yeah, exactly. And I think, and obviously, it becomes applicable when we look at the reduction. But that's a good point. Is really we're looking at call it, this is not the technical GST Act term, but it's business as usual turnover, essentially. So, those things that are outside of that or outside of business as usual, as Brian said, more than likely not included in this test. All right. Brian, do you want to cover this one?
Yep. So here's where I suppose we've been getting a lot of questions around, which is, what do we need to assess ourselves against? How does it work? Is it monthly, quarterly? Do I need to keep retesting? All those sorts of things. So we'll try and answer a lot of those questions as we go through this example and information. But firstly, one of the things I would throw out there is once we do pass a test, we don't have to go back and repass that test every month or every quarter. We're actually then in the system for the rest of the period of time through to the end of September. So we only need to pass the test once and we're in. So we may not be eligible for the first 3 months, but if we come in June, then we're eligible all the way through. We may be eligible for March and April and then fall out of that, but we're still then in the system for the rest of the way through, as long as we can use this testing that we're going to go through to show that we qualified in a relevant period. And if we do that, then we're okay. So this table here is really just showing us where we can be comparing monthly or quarterly. And so the comparison period is really just that same month in the previous financial year or the same quarter period in the previous financial year. Now, this is going to cover the majority of businesses, but for those that have a startup business, recent acquisition, different things, there are some other tests that we'll talk about shortly, but this is for those where it's pretty much been business as usual over the last 12 months. So a very quick example in this one, if we were testing for, say, the month of April, and in April 2020, our expectation was that our turnover was going to be well down below, over the 30% down, and we compare that to April last year, then if that's our basis that we look at, that we're going to be well under, then we would certainly be applying, enrolling, and then putting in the application for JobKeeper, basically from the 1st of April. And if we get to the end of that period and yes, we've passed that test, we're in for the rest of it all the way through. Okay. Some of the
which is great. We're a bit concerned about that.
Yeah, it's awesome because you don't have to look at trying to do the test every single month after that. You can move on and concentrate in other areas rather than just what's my turnover got to be? Do I need to hold off billings? All the other things that people are thinking of trying to do. It's trying to get away from that and say, let's get back to business as usual and make as many things happen that we can actually have control over. So the next page will probably work some numbers into this, which might help clarify. So in here, we've turned around and let's say we've just pre-filled the first column of the 2019 actual, because they're last year's figures, and they're probably the figures that you'll have put on your BAS or formed your BAS information that you notified to the ATO back last year. But breaking it into months there, we're looking at April of 275, May 325, June 300, and then a total quarter of 900. Now, if I was sitting here budgeting and saying, what's my turnover going to be in April? I might have thought it's going to be 250. May, I might be thinking, yeah, it's going to stay at 250. But then I'm really going to hit a decrease after that, and it's going to drop right back to 120. So when I look at that, if I was just comparing on months, my month of April, I've only dropped by 9%. So if I'm just looking at that month, I wouldn't be eligible. If I'm looking at May, there's a drop there that I'm expecting of 23%, still doesn't make me eligible. But June comes in and that's an horrendous month, and I've had an expected drop of 60%. So therefore I could look at that and say, well, June, I'm certainly eligible, but because we're also able to look at it from the point of view of a quarter, well, my budget for the quarter is 620. My actual last year for the quarter was 900. That is down by over 30% overall. So that allows me to go claim for eligibility right from day one at the 1st of April. So you can see where there's a difference. In April and May, I wasn't technically qualified when applying a monthly test, but if I apply a quarterly test, I've actually passed the eligibility test, which means I can claim from the 1st of April. Hopefully that came across the right way, Joe.
Yeah, spot on. And I suppose like people will be looking at this and saying, well, how do we estimate what's going to happen? And that's a great question, to be honest, because none of us really know what's going to happen. It's going to be harder for some businesses than others. For some businesses, it's going to be very obvious. April's just going to be down by 30%, or your turnover is just completely gone. Very simple. But for others, and there's a slight decrease or it's gradually declining, a little bit more complicated. We're going to go into a bit more detail later about what happens if you estimate, and then you don't. Then the estimate that you put in is actually a bit low, a bit on the low side. So it's essentially, you don't meet the 30% like decline like you thought you would. What happens then? Because obviously that'll be a concern for people and a valid concern. So we'll step through that. Suffice to say, the ATO's said that there's some rules around it, but if you're reasonable with it, they're going to understand and they won't be too harsh on it.
And we'll actually start on that now, Joe.
Great.
So here's just using the data from the previous example. We're now showing filled in a column for what actually occurred. So in April, we actually did a 260,000 turnover. So we're only 5% under, 245. So we're pretty close to our estimate, 24% under. But we actually billed 135 in the June month, which meant we were better than our estimate. And whilst in the month of June, it was 55% under last year for the quarter, because that was the measurement tool we were using, we're now only at 29% under, and not the 30% that we were using in order to get eligibility from the 1st of April. So in this sort of space, this is where the ATO was saying, well, okay, we're not going to turn around and be that technical on it. You have to have met that 30%. But what we are going to look at is and have an objective assessment of how did the reasonable person come up with those estimates in the first place. And they'll have regards to the facts and circumstances that apply to your enterprise. And they'll be essentially accepting your assessment on the basis to believe, well, that's what a reasonable person would have been able to come up with. And so therefore, I think if we're missing the actual test by a few percent, it's not going to make a major difference. Look, if that's down at a 25s and under from that, I think that could be a different way that they might look at it. But really important that we're able to set out how we've come up with our estimates so that they can apply this reasonable person test. And we'll talk more about that shortly as well. But just highlighting in this case, we've really applied for our eligibility based on our quarter being over 30%. We've got there. And remember, we will actually be reporting monthly data to the ATO. So they will also know that we didn't get to the 30%. And in this case, we're at 29s. They're not really going to take any action in this case at all. That's probably for that one, Joe.
Yeah. And in relation to, just to clarify, I suppose, a bit more what we're talking about is if you start to get well under, they are talking about obviously payment back and that sort of thing. But at some point in time, if with a certain amount of leeway either way, they've sort of left that open a little bit. They haven't specified to say if you're under this, if you're within this range, we're going to request that. If you're in this range, you're okay. It's just, as Brian said, that reasonable person thing. And if your mile's different, which makes logical sense. If you've turned over money, more money than you expected, and you've still got money to fund wages and all those sort of things, then perhaps the logical thing is that you're maybe not as eligible, or you're not eligible for it. But if you decline like you thought you would or close to, then okay, no problems.
Exactly.
All right.
So if we move on to the next slide, this is where it, I suppose, becomes really important to start to collate this data now, so that if it comes to it and we're not clearly passing that 30% test, you want to have documentation that backs up how you've come up with the figures that have enabled you to enrol and apply for it in the first place. So be looking to put together, a schedule like this that details these numbers. Remember, these are just the final numbers, but how you come up with the estimates for each month is also very important to have in the background. So if we've got these things, they all help in any discussion you have with the ATO later on to show that you've followed a methodological system to come up with the numbers in order you to come up with the decision that you can apply. And that just helps give weight to that being a reasonable person test, rather than them coming back and saying, okay, can you tell me how come you've applied, yet you've only got to 25%? And you're just really saying, oh, well, there's a gut feel. And, a few guys told me they weren't going to be doing the jobs they wanted to do with me anymore. So I knew I was going to be down. In those cases, I don't think they're going to show as much leniency, but if you've got the paperwork to back it up. So be suggesting you put together a table sort of along these lines for the high level numbers. And we've got a copy of this in the notes for you to actually use, and a template we'll be shooting out later as well, so that you can actually pre-fill this in, and it should populate the percentage differences automatically for you there as well. So everything we can do to help move you along and get more comfortable that you're actually going to be eligible for the JobKeeper.
Absolutely, and I think we said before, for some businesses this is going to be more obvious than others, depending on your scenario and what's happened with your trading. But we suggest everyone does this anyway, as a matter of course. Your 2019 actual is relatively straightforward, given that it's already happened, and you're really just looking at historical data to fill that in. Your 2020 estimate, there's a little bit more work that goes into that. Obviously, as Brian said, you get to a reasonable point, a bit of thought that gets behind that. But again, worthwhile exercise to, outside of this, worthwhile exercise to be thinking about anyway, as far as looking at a forecast and seeing what's going to happen. So in an ideal world, we'd like for people to be aware of what's coming up anyway. But obviously more important right at the moment. And the ATO will take into account the fact that we're going to use that word again, that unprecedented word. We don't know what's going to happen. There'll be things that happen that are completely unexpected and that are out of our control. So there'll be a little bit of leeway, as long as you can show, as Brian said, if you're just putting it together on a napkin and putting it in on that basis, probably not. But if you've got some thought behind it, some notes there, and we're happy to help with that, then you're probably okay if you're within a range.
Yeah. Exactly.
All right.
Then onto this slide, which it's then just completing, I suppose, the actual figures all the way through as well. Each month, when you're putting in your data in order to get reimbursed, they'll be requesting your turnover information. So they're going to get that on a monthly basis as well. So this is the template that we'll be shooting out later that allows you to also put that information in there, so that you're well aware of what numbers you've applied upon, and then what numbers are actually really applying to your situation, so you know that you actually have been eligible, or whether you are in that little bit of area where you may expect a phone call or discussion point from the ATO later on, which is when you really need to have the other data behind you with your budgets. And I'll just read out a line from one of their things where they talk about it. For the purpose of calculating your turnover, they'll accept a calculation based on a bona fide business plan, accounting budget, or other reasonable estimate. So the closer that is to a proper cash flow that's put together, the more secure you can feel in the passing of the eligibility test, and that there won't be any repercussions for you later on. And as I said, we'll be emailing this out to everyone that's here in actually an Excel format as well, so that they can enter their data into it, and hopefully that helps people along the journey as well.
Always a bit of a challenge with this stuff when we're talking about forecasting. because it'd be easy if we could just say, well, let's look at what's happened versus what's happened. So, March versus March month, or February versus February month, or whatever it might be. Because then it's actual. Like, there's no grey area in that. It's what's happened. But I suppose for the benefit of your business and for what this is trying to achieve, the ATO has given that scope to allow for a forecast, which makes good sense. We just need to be careful about how we do that. Okay. Commissioner's discretion on turnover testing. This is the other thing we got a lot of questions on last week. We don't have absolute answers on this stuff. Yes, they've given more guidance on it. They've given some examples about what might, and the examples they gave are probably around the startup business, so a business that commenced in October 2019. So again, there's no comparison period last year. Or another one around a primary production operation that was in that had experienced a drought year in the comparison year, so it wasn't an effective comparison, or it wasn't a fair comparison for the purposes of the test. Basically, they've said that the commissioner can provide discretion, or can exercise discretion to use different testing if it's deemed that the testing that they've got in place that we've just gone over is not relevant to the business. And it says there, so limited discretion to a class of entities, unlikely to apply on an individual basis. Classes may include startups, service entities, cyclical businesses, so farming, tourism type businesses, and variable turnover businesses. So businesses that go from having turnover of 4 million 1 year to 1.5 million, 2 million, 500,000 1 year. There's businesses out there that's their standard cycle of business. Again, if you're one of those businesses, it'd be worth having a look at this test. But the example that they've given is, as I said, the startup. So I don't think we've got a slide on this, but it basically says that the example business starts in October. Obviously, they don't have any testing period from March 2019 or April or onwards, because they weren't trading. So what happens in that scenario? Well, the commissioner said they'll take an average of the months of trading leading up to when they were affected by COVID-19, and they'll use that as the turnover test going forward for monthly and quarterly testing. Same with the drought with the primary producer. So the example there was that the 2019 March or April month was terrible because it was a drought year and it was unusual. So the commissioner exercised discretion and said you can go back to the 2018 financial year and 2018 year and look at that period if that's a more realistic estimation of what the turnover would have been, and use that as the test to prove that your turnover has declined by more than 30%. So suffice to say, if you don't pass and your business is you believe your business is outside the norm, please just contact us and we'll talk you through this, and if it's worthwhile going for commissioner's discretion as part of the turnover testing. Anything further on that, Brian?
No, it was more just saying that they're not going to look at talking to individuals. They're not interested in listening to them at this stage as far as their discretion, because they're only going to apply it to classes. So it's if anybody's sitting out there, but they don't understand me, I want to talk to them. They're not going near that. It's saying, well, you're either going to fit into these or you're not, which means you could fall through some cracks. But they're not there trying to make something that fits everybody.
Yeah, and that last one, that fourth one, is probably the key one that probably brings in a lot of businesses, that variable turnover. Brings in a lot of industries. But the obvious ones were the startups and things that was the first thing that jumped out to people. What if my business has only been trading for 4 months before this happened? What happens then? Well, they've outlined some guidance around that. So. But I probably wasn't clear there. As Brian said, they're not going to take individual discretion on every single client, because obviously that would be an absolute nightmare. But there will be some stuff that comes out across classes as we go through.
I might just touch on the service entities one there, Joe.
Yeah, great. Yep.
I think it pops up in the questions. But with service entities, which is generally another company that sits to the side or some kind of entity that might be employing staff, which pays a fee over to another company or entity within the group. Now, whilst the other entity in the group that's trading might have suffered a downturn of 30% or passed those eligibility tests, if the same fee is being charged between the payroll company, so to speak, service entity to that other one, so that there's no decrease in the service entity, then it won't actually be eligible for JobKeeper. So when we go back to it before, it is a test that is at entity level. So if that's the entity that's paying the wages and its turnover hasn't decreased, it will not be eligible, even though the trading entity that it pays its service fee to has gone down. So you would need to look at how that service fee charge is calculated and ensure that if the group has gone down by 30% in its turnover, that is passed on in some way, shape or form to that service entity to ensure that it has also then come down by the 30% to meet the tests. Otherwise, to the service entity, it is just going to be business as usual with no subsidy from the JobKeeper side of things.
We might just cover off briefly on that with the integrity measures, but Brian and I and a number of our team attended a seminar run yesterday, and they were talking about this particularly and how potentially difficult that is to actually reduce the income between the head entity or the operating entity and the service entity, without I suppose being obvious about the fact that you're doing it to reduce it by 30%, unless the agreement is linked to turnover, which is so it can be very difficult to come up with a valid argument as to why to do that. It's possible, but if you're in that situation, certainly contact us because it is a bit more complicated.
Now, also, Joe, just being mindful of time, I'd suggest we're going to go a little bit over today. So just warning everybody that's out there by the time we get through.
Yeah, definitely. There's a lot to get through here. So who in your business is an eligible employee? Requirements: employed at any time during the fortnight. So we're talking about the fortnight here. Employed by the employer on a full-time, part-time or long-term casual as at 1st of March 2020. They're going to be at least 16 years old at that date. Be an Australian citizen, doesn't overlap with paid parental leave, and is not being paid partner leave. So your paternity leave there from Centrelink. Not totally incapacitated and being paid workers' compensation. Has been given a nomination notice has given a nomination notice to the employer. So we'll run through that in a minute, but nothing much has changed there. The PPL stuff, paid parental leave and stuff, has come into it as far as the practicalities of it. But those rules were pretty well the same when we discussed this last time around. Being employed full-time, part-time, long-term casual, defined as work for the business for longer than 12 months, or for the employer regularly for longer than 12 months, and they've got to be 16 years old and a citizen. I think there's also some ability for some New Zealand citizens on certain visas to get access to that as well, which you mentioned there. I think that's it on that one. Brian, were you going to say something there? Sorry.
No, I think we can move on from that one.
Okay, great.
Then we've got the wage payment conditions. So this is where they're talking about it needs to be $1,500 that you're paying to the employee. And so that can be made up of the salary, wages, commissions, bonuses, allowances that are paid in the fortnight. So that's the net amount we're talking about there. Then also the tax that's been withheld from those payments, other amounts that might have been by agreement taken out for that might be going towards social club fees, something like that, and any salary sacrifice amounts. So they're really coming back to saying what the gross amount needs to be $1,500 is the plain English way I'll put that.
Yeah.
And really important, if it's not $1,500, if it was $1,400.98 that you paid them in that fortnight, then you will get a zero reimbursement. So need to be able to pass that $1,500 test.
Yep. So that's it's got to be made up to that at a minimum across all those payments. So for people that are over and above that anyway, and it's business as usual, that's not an issue. It's probably those that are stood down or at lower rates of $1,500 per fortnight where that becomes a challenge.
Yep.
So keeping an eye on that. because that is one of the tests, is that it does need to have been physically paid to them. So information will be provided to Commissioner and employees. So in doing that, we've got to, whoop, sorry.
So that might be my mistake.
So we've got to notify the Commissioner of the employee entitlement. So employer must notify the Commissioner about each employee's entitlement for the fortnight. So we're now talking about the claiming process on a monthly basis, likely to be through single touch payroll. Again, they haven't confirmed that, but they've sort of said that's what's going to happen. Single touch payroll, as we discussed last week, if you're not on it, get on it, and get registered for it, because it's going to make things a lot. They haven't said you have to be on it to do it, but it's going to make it a lot simpler because I'll pre-fill it. It'll be easier for you, and we need to do it anyway. Notify employee of the employee entitlement. So the employer must notify the employee in writing within 7 days of notifying the Commissioner of details of the individual. Election to participate. The employer must have notified the Commissioner of the election to participate in the scheme by the 26th of April, 2020. Is that the date that's moved back, Brian, to the 30th? I think it is, potentially.
Yeah, it could be. It could be.
Yeah. But it's between next Monday and essentially the end of the month, as quick as possible after Monday. Employer must have notified the Commissioner of the election to participate in the scheme by end of the relevant fortnight, and within 7 days after end of month must report entities' actual GST turnovers. This is what we're talking about. As Brian was saying earlier, you're going to have to report that on a monthly basis. Actual GST turnover for the month and projected GST turnover for the following month. So we're talking about what has been and what is coming, and that's so requirement to do that anyway on the way through, to get a bit of an idea of what's actually going to happen on the way through. Either way, don't get confused with that being on your BAS. That's going to be reported separately. So if you're lodging monthly BAS, that will be continue to happen as normal. The reporting of the actual GST turnover is separate to the BAS. We're talking about an application to the ATO for the JobKeeper payment. So even if you're not on monthly BAS, you're still going to need to do that.
Cool.
All right, on to the next one. Brian, do you want to take it? You want to take this one? Or you want me to do that?
Yeah. No. So moving on from that, obviously the steps. First of all, we've got to register the entity. So most will have already registered your interest on the website. You need to go through and check your employees that meet the eligibility requirements. So really working out those with your part-time, full-time, if our casuals that meet those sort of things. There's further things in there, obviously, as to whether they're Australian citizens, visas, that sort of thing. So there'll be more notes that we'll show you later that go through those, but you need to check your employees to meet those requirements. Then need to notify the eligible employees of intention to claim JobKeeper payments for them. And so you're going to send that nomination notice to all of those employees, and they need to return that obviously to you. Because if they don't come in, then I don't think they can actually, you can't claim on their behalf for JobKeeper as well. You need to keep that notice on file and a copy kept by a registered tax agent. Then from the next step on the 20th of April, that's when you can start to enrol with the ATO using the business portal or through your tax agent portals, those sort of things, where you're enrolling to actually join the JobKeeper scheme. So in that online form, we'll provide your bank details and estimate your number of employees for your first and second JobKeeper fortnight. So that happens at that point in time. So there's a little bit to do between now and then as far as with the employees.
Yeah, we're going to see. We're going to see a lot more about that and how that actually looks and feels when we actually do one on Monday. But essentially, there'll be some things that we've listed the things down there in order. Some of those things will happen in conjunction with one another on the way through. But essentially, from next Monday, we'll be able to enrol using the business portal to get it, if you're eligible for JobKeeper, to apply for it. Obviously, the bank details are there so they can give you the money, and then we'll move on to the next one, which is steps of confirming the eligible employees for April. So again, we're applying to claim the JobKeeper payment by logging into the portal. This is in early. This is in May. We're going to do this. Ensure you have met the wage payment conditions. So you paid your employees for up to the minimum of $1,500 per fortnight for the eligible fortnights. Identify the eligible employees in the application form. So again, we think that's going to be filled from single touch payroll. So there may be some casuals and things on there that are not eligible. Or if you haven't received their form back from them, they may not be eligible either. Submit the confirmation of eligible employees online. You'll receive a notice via SMS to say that you've done that. Notify your eligible employees that you have nominated them. And then ATO will pay employer JobKeeper payment after receiving the application. So then we reconfirm each month. So we do that every month after that. And we reconfirm each month the eligible employees have not changed. So if you've got new employees coming on, they're not going to be not going to be eligible because they're not an employee of your business. But if you've lost an employee or something's changed, that may change. For most people, that's just going to stay as usual most of the way through. So that, just to be clear, we've got to do that at the start of every month in order to be paid this. So we've paid our staff our $1,500 minimum per fortnight. That's out of our cash flow. In order to get that money back, we've got to complete this process and satisfy all those conditions. And then the ATO pays us the money to reimburse us for the money we paid to our staff. Okay, information for self-employed people. So this is around what we spoke about with sole trader, partnership, company and trusts that maybe don't employ people or don't employ the owners of those or the controllers of those entities. So they must satisfy the basic requirement for employers. Cannot be basically that's the 30% downturn. You've got to be in business at the date of 1st of March. Cannot be a not-profit body. Individual must be an eligible business participant for the fortnight and is the only nominated business participant. So we'll run through that in a minute. No other entity is entitled to a JobKeeper payment. Entity has an ABN as at the 12th of March 2020, so slightly different date there. 2019 or pre-12 months. Sorry, I can't see that. I can't see that right in there at the bottom. But 12 months taxable supply requirement is satisfied.
Yeah.
So basically, there's a requirement that you've had income or you've been trading prior to that date. There. So what we're talking about here is, say, an example, a standard example is a tradesperson who is a sole trader. So they've just got it's just them. They've got an ABN. They've been operating business for X amount of years. Let's say they're a Sparky and their turnover has dropped dramatically because they're doing domestic stuff and people don't want them in their house or that's backed off a lot. So their turnover has reduced by 30% or will reduce by 30%. So again, they pass those tests. They're eligible to apply for JobKeeper, and just like the other entities with the employer. We're talking about the this person being actively engaged in the business. So that's more around the shareholders or directors for companies or an adult beneficiary for the trust. So if you're a passive shareholder, director, or passive beneficiary of those entities, technically you're not eligible for this. So what we're talking about there is you're basically a beneficiary or a shareholder or director in name, but you're not actually working in the business. You're not eligible for that JobKeeper payment. Partnership, only one partner is eligible for this. So, and again, that person has to be actively engaged in the business, and only one adult beneficiary and one shareholder or director for a company is eligible if they're engaged in the business. So again, it's quite a lot of our structures where this would be the case. We're certainly sole traders, partnerships, same thing, but trusts or companies, potentially the owners of those businesses aren't paid a wage to minimise things like workers' comp and payroll tax and those sort of things. They're paid a drawing or a dividend or a director's fee or something of that along those nature. You are certainly still eligible as long as you're engaged actively in working in that business. And only one of you is eligible.
And the other difference in that one, Joe, is whilst in the other businesses, the JobKeeper is a reimbursement that comes into the business and it's income into the business, it gets paid out as wages to employees. Within these ones, when there's an individual nominated, the income comes into the business, but it doesn't actually get paid out as a wage. So it's up to that entity as to what it does with that income. It doesn't have to go out as a wage to the individual person.
Yeah, that's a great point, because that'll have some implications around, particularly for companies. We discussed this and heard a bit about this yesterday. But getting that money out to the individuals may prove difficult, and that's one of the things that that we're waiting to hear back from the ATO on, or waiting to hear more detail on the ATO on, because obviously that's the company's money. You've received that. How do we get that out to an individual, or do we just leave it in the company? What's the what's to go with that money? So that's what the self-employed rules are. But yes, great point. You don't necessarily need to pay that onto yourself. Integrity measures. This is the as aforementioned scare your pants off ones. So basically, we'll run through these. But basically, it's saying don't create a scenario or a situation where you manufacture or create a scheme to achieve to receive the JobKeeper when you otherwise wouldn't have. So don't restructure. Don't start trying to employ and backdating and do things that will see you receive it when probably you shouldn't be. So again, it's a do the right thing test essentially. So the overpayment of debts. So again, we'll just quickly step through these. Not entitled to JobKeeper, then you need to repay the amounts if the ATO deem that's necessary, and general interest charge will be applicable on that. Joint and several liability where overpayment of debt. So if another entity made a statement that is false or misleading or due to fraud of another entity, an employee, so i.e. the employee provides false statement of eligibility in notice. So you noticed before that we said that the employer will provide a notice, the employee has to sign that and provide it back to the employer. If the employee provides a false notice at that point, or false declaration at that point in time, there's joint and several liability for the overpayment of that. So essentially that can go back to the ATO, can go to the employer, the employee, and potentially a tax agent or anyone else that assisted with that. So again, I suppose they're just widening the net there to make sure that people aren't, organising this together. Record keeping requirement, no entitlement unless entity complies with pre and post payment record keeping. So you've got to retain your records for 5 years, basically, all these forms and documents in the approved form. Contrived schemes, again, scheme entered into for the sole or dominant purpose of being made the payment when you otherwise would not have been entitled. And here's where it gets interesting. Financial penalty of 75%, or so false or misleading statements. So intentionally false or misleading, financial penalty of 75% amount of overpayment. So if you've been overpaid 50 grand, 75% of that, so whatever that is, that's 37.5 grand is a fine, and then 50 penalty units, and then potential imprisonment for up to 12 months. That's a bit daunting. Failure to comply with tax laws, similar sort of penalties there. Obtaining financial advantage by deception, imprisonment for up to 10 years. A conspiracy to defraud, imprisonment of up to 10 years. Obtaining financial advantage, imprisonment for up to 12 months. Fairly obvious here that they've put some very heavy-handed things in place to make sure that people are absolutely sure and aware that they should not be doing the wrong thing here. And if they are, they will be prosecuted. And they've made that very clear. And I think, again, one of the stats from the Future Partners webinar yesterday was along the lines of that it could cost them double, or they're aware it could cost them double to the 130 billion that this is already going to cost if people take advantage of it. So they're very, very aware of the fact that this could leak, and they're going to be absolutely lightning on stuff and be very harsh. So pretty simply, just don't do the wrong thing.
Let's do the right thing, Joe. That's the name of the game.
Yep. Okay.
So just probably finishing off just here is, there's a lot of data we've given you on different things that need to be done, but just an example here of a link to the ATO website, of which will also be in the notes, is just, you can see there where they talk about the enrolment, what to do, what dates, step 1, click here, step 2. So it's just trying to set it out in an easy to follow format, just to help you through the process. So if you're feeling a bit overwhelmed by everything that we've been talking about and it's coming from all over the place, please calm down. It's going to be okay. We've got these things to fall back to. You've got us to help you to go through the system as well. So we'll obviously all be working pretty hard in the next couple of weeks as we go through the enrolment and then start the applications. But we're here to hold your hand on those side of things. So this was just purely to let you know there's more data out there to help try and simplify it as much for you.
Great, and here's us. Here's a picture of us working hard, Brian, at all hours of the evening. That will be probably taking place over the next few weeks to try and get all this done. But we just wanted to put the key actions down to try and distill this down a little bit here. Items to consider: understanding the payroll system and how payments will be processed. Rihanna, one of our team members, actually sent some stuff around about this yesterday. She's got her own business with her husband and has been working through this with some clients. Has already been looking at the, I suppose the detail of how we process through various payroll programs, whether it be Xero or Quicken or Mild. Please reach out if you need a hand with that. When you'll be in a position to deal with April. So are you eligible immediately? And let's get onto it as soon as possible. Obtaining GST turnover calculations for comparison period. So as Brian said, that's already happened. So let's use the table we're going to send you. Go back and fill them in now. We know what they are. So let's go and get them down. Putting together appropriate budgets for projected turnover. So again, that's putting together reasonable forecasts around what you think is going to happen over the next few months, so that you can apply if eligible, or be reporting that as you go through anyway. Ensuring budgets will be acceptable to the ATO. So it's probably more just sense checking that, using us if you need to, making sure that the budgets are actually going to be able to be relied upon as a reasonable estimate. Determining if the employer entity is an eligible employer. So again, that's coming back to has it actually reduced by the 30%? Was it in business? Understanding funding requirements and considering short-term funding. Again, we've got some questions around this, but it's probably more around, okay, we're going to have to pay these things in order to meet the requirements. So how do we do that? Because obviously there's a fair bit of cash, depending on how many employees you've got, that's got to go out between now and the end of April in order to meet that requirement of having paid it for the last 2 fortnights. Ensuring appropriate documents and nominations are completed. So that's, again, what we've referred to between the employer and the employee. Be careful of any potential breaches of the integrity provision. So again, do the right thing. Pretty simple.
Now, Joe, just before we move to that question and answer, just back aside there under the understand your funding requirements.
Yes.
So there's a number of people out there that have obviously in shutdown mode or are very their turnover is reduced to critically low levels. So therefore, the idea of being able to pay this $1,500 to my team and employee on the way through is where do I find the money from? What's that look like? We're seeing nothing from the ATO that's going to allow us to not pay and get the money. So it is very much a reimbursement, and they're pushing very much to talk to your bank. Talk to the bank about accessing the $250,000 overdraft is the idea that they're talking about. But in discussions I've been having with banks, it may not be the 250, but because we need to get this done very quickly, they might just put in straight automatic extensions onto accounts and allow 20, 40, 50 grand, whatever's required, possibly, depending on your relationship, in order for you to pay those employees, because they know that money is going to then come in the next few weeks. So really critical, reach out to your bank, because we need to make sure you've paid those people prior to the end of the month. And then going forward, because April they're going to show some discretion, but going forward, I'd suggest they're not. So we know the banks are doing that, and it's probably the simplest way of being able to see providing funds at this stage.
Yeah, and the government have said that they've spoken to and take this for what it's worth, but the government said they've spoken to the banks and they've encouraged them to provide short-term funding, given that they know it's effectively a government guaranteed amount that they're going to be getting paid back if they're eligible for JobKeeper. So I actually had a discussion with a client this morning along similar sort of lines with the bank talking about using the funding for JobKeeper and making sure they can make the payment. So that's certainly there. Look, I think the key things that, again, it's going to come back to that communication piece, and also remembering that this is not going to be a 1 month issue. If you're not trading, you'll make the repayments. You'll make the payment. You'll be reimbursed. You've got to continue to make those payments, as Brian said on the way through. Just wanted to touch on something briefly for those that are monthly payers. There is a provision in there that if you are a monthly payer and that's how you pay your staff, that you can reasonably assign an amount or a value across two fortnights for that month. So, for instance, if you pay $3,000 for the month in one lump sum, that's okay, as long as it can be easily seen to spread across two fortnights, and it's met the minimum $1,500 repayment per eligible employee. So, for those of you that pay monthly, that's how that will work.
Yep.
All right. I haven't had this chat box open, so I'm a bit daunted by what we're going to have here, but let's see what we've got. We'll just put our see it's panic. Okay. So let's get back into this chat. Oh,
there's a few there, Joe.
I'm running into issues seeing it, so you might have to run that, Brian. Sorry.
Well, just looking at the first one, question from Bron. In relation to a company situation with one director and both the director and another family member actively work within the business, will they both qualify for JobKeeper? So looking at that one, Bron, I'd suggest that the other family member is going to have to be an eligible employee in some way, shape or form, because if they're not, and they're not a director and not a shareholder, then they won't be eligible for the JobKeeper. Most certainly the director working within that business will be as a director, especially if they're an employee as well. But I think just as a director, they would be eligible. The other family member needs to make the eligible employee test.
Yep.
Agree with that, Joe?
Agree.
Sharon had a question. I have 3 apprentices. Can I claim the 50% of wages for the first BAS quarter and then job seeker from April? Thank you. I think I've answered that one to Sharon directly previously. She certainly can claim the apprentice rebate for that first quarter, January through to March, and then swap over to JobKeeper from the 1st of April. But obviously do the math on it. The JobKeeper should be worth more to you than the rebate for apprentices, so that should be fine. Clayton, we have multiple commercial rentals, 100% occupied, but revenue has dropped 50%. Question, what support is government offering? So Clayton, on that, that's a different one because it's coming from the landlord perspective. From your point of view, it's probably not the revenue coming through to you that makes a real difference there. But if your tenants are all still paying their rent, then that's awesome. That's great. But if they're not paying their rent, then that really needs to fall back to the code of conduct that we were talking about last week. So that if there has been a, let's call it a 40% drop in their turnover, then should be talking about dropping the rent by 40%. And then within that 40%, talking about half of that being probably waived and the other half deferred till later on. But it really falls under that commercial code that requires the landlord and the tenant to talk to each other. But as I said, if you've not suffered any drop in your rental side of things, unless that's the revenue you're talking about, then there's nothing you need to do. From the government support side of things, I think there's different land tax offerings and reductions that are occurring in those areas to help you through. There's obviously assistance with banks if you're in debt position at all to be able to defer payments with that. But But no, I'd probably like to talk to you more about that one on more the revenue drop. Is that the tenants just automatically have dropped that rent on you without talking to you about it? Because if so, you need to open up a dialogue with them to work out what that looks like longer term as to how much of that may be rent-free and how much of it's deferred to a later time. Hope that provides some assistance for the moment, Clay. You back on track at all yet, Joe?
No. Yeah. Amy, if you can hear me, I can't see the chat. I can't open the chat thing, so I can't see any questions. But well, if you want to keep running through them, I suppose we can. If I've got any thoughts, I can answer.
No, that's all right. I just wasn't sure how to bring the questions up like you were doing last week. Anyway, Sue's asked a question. If the business isn't generating income to pay the staff and has no cash flow, how are you expected to pay the JobKeeper payment in advance before being reimbursed? So that's probably one we just went through then. The expectation is it needs to be paid. So they're talking about talking to your bank, getting extensions, overdraft, the things that they've tried to put in place with the bank to enable that funding to come your way. So hopefully that answers that. Question number 2 from Sue. She's got a couple here. Are we guaranteed refunds if we pay them? The ATO are essentially saying that, yes, if you're eligible, you're guaranteed to get this money back from them if you pass the eligible employer business test and the eligible employee test. So they're basically saying if you tick those boxes and you've paid the amounts out, they're guaranteeing them back to you. When do we expect to get confirmation from ATO we have been accepted for the JobKeeper? Well, enrolment starts for that next week on the 20th. So that's when I think Joe mentioned before, they're sending out an a text is what I'm trying to say out to confirm.
Yeah. So they've confirmed I'll send a text after each application to for the monthly ones. Not sure about the initial enrolment, but you'd think they would. I don't think they're providing the data around that, Sue, but I think they're basically saying that if you apply as soon as possible between Monday and the 30th, or next week to be safe, that you'll hear back pretty quickly as to the fact that they've received your application at a minimum.
Yep. Next question, do we have to supply staff details for the JobKeeper, or are the ATO accessing this information from One Touch Payroll? So essentially it's up to us to supply the information to the ATO for JobKeeper. It's just that the ATO will be utilising information within Single Touch Payroll to help pre-fill in those application forms. So if you're using Single Touch Payroll, it's going to make it easier. But there'll be people in your payroll that you may need to take out as far as the actual application because they don't meet the eligible employee test. Trust that satisfies that one. Can staff be paid annual leave or any entitlements owing whilst not working? Is this legal and does it fall into JobKeeper guidelines? Joe, you want to throw some light on this one?
Yeah. So look, it's probably a bit of a mix of JobKeeper, ATO, and Fair Work in this one, Sue. Look, broadly, if the entity was eligible for JobKeeper, one of the powers that the bill that was enacted last week gave to the employer was to compel their employees to take leave up to a certain point. Certainly, staff can be paid, can choose to take annual leave or long service leave or any of those sort of leave that they're eligible to take if they wish to. Just be careful about compelling them to do that. I would check. Again, we're not Fair Work experts. That's more the HR and lawyer side of things. But I would check before you go to do that. My general understanding of that is that if you're eligible for the JobKeeper, you are able to basically compel your employees to take leave down to 2 weeks minimum. And from there, discussing from them. Obviously, they can take leave without pay as well. As far as how that works with the payment of it, that annual leave payment is essentially just a payment just like any others, like a gross wage. So it's as long as that's up to $1,500 or above, it's fine. If it's not, it'll have to be made up to that amount in order to satisfy the requirement of paying it.
Awesome. Now, Niraj has asked whether the 100% asset write-off will continue after 1st of July for business under 10 million.
Not a non-JobKeeper question. You beauty.
No, not a JobKeeper. And the answer at this stage for that one, Niraj, is no. We haven't heard anything about it continuing past 30th of June. It's only in place till then for new and second-hand assets. And then they've got their other test that applies from the 1st of July going forwards. Next question. I think we've answered that one on the service employment companies. So we'll pop through to the next one. Can the branches under the same ABN qualify for turnover test? Now, Joe, you were looking at that one. They would be pulled apart for grouping purposes.
Yes. Sorry, guys. I just had to move there because my family arrived home and I was sitting out in the family room. Yes, for the 1 billion test, they're grouped. For the individual reduction in turnover, they're separate. If they're so it's individual businesses, even if they're grouped for GST purposes, they're separated if they're each employing or if they're each employing entities. Obviously, if they're not employing employees, they're not eligible anyway. But yeah, the reduction in turnover just needs to be shown in the business that's employing staff, not across the group. I hope that answers that, Niraj. I can now see these now, Brian, which is good.
Oh, good. So Mary's asked, we have employees who don't earn $750, example apprentice. Do we pay them $750? Explain what I need to do if I have already paid March wages and to date as per normal. So with that one, Mary, you will need to, if they're going to get through onto JobKeeper and you're eligible as a business to be able to bring them through and they're eligible employees, then you will need to pay them $750 per week to meet that $1,500 per fortnight test. So if you currently only have to pay them $500, say a week, you're going to need to increase that by another $250. So this is before tax as a gross wage. So that would then take you up to $1,500. You don't need to pay superannuation on the extra $250 that you're topping them up on. It's just the $250 to get them to $750. So that way, come a fortnight, you'll have paid $1,500. So that's what you need to do moving forward. As far as March's wages are concerned, they probably don't need to be worried about, but it's the month of April that kicks in because the first month to be reimbursed really kicks in from the 1st of April moving forward, or from the fortnight starting the 30th of March. So really when we get to the end of April, we need to make sure that for the 2 fortnights that have gone through, that you need to have paid $1,500 for each of those fortnights for the apprentice so that you can get reimbursed that $3,000 when you're putting your application in the first week of May. Anything I need to add to that one, Joe?
No, I think that's spot on, mate. Perfect. All right. So, Brenton, is there a cutoff date for when you have? When do you have to register? Also, is there a cutoff date for when you have to register or enrol for JobKeeper? Yes. I believe that you've got to do the original enrolment or the initial enrolment, Brian. That's what we're talking about before the end of April. Is that right?
Yeah, look, I don't think there's necessarily a cut-off date for it, but it's just that they're not going to go and back pay. So you might look at things and say, I'm not going to be eligible for another 4 months yet. So therefore, you won't actually necessarily go and register a bit later on. But at this stage, look, I would err on the side of we're not totally sure, but I would be trying to make sure that if we think we're going to be eligible or even get close to being eligible at any time in the next 6 months, we enrol next week. And each month that goes past, if there's nothing that we're not entitled to, then we just we can respond and just pass off that month and pass off the next month as we go through.
Yep.
We may end up with some more information on that one soon.
So, Mary, just to clarify, you've mentioned here, okay, that answers my question. So most apprentices don't qualify. I suppose if you're talking about don't qualify for JobKeeper, no, I'll just clarify, that's not the case. If they meet the requirements of the full-time, part-time or casual, and most apprentices will be full-time probably, or part-time at worst, they are more than likely, and they're over the age of 16 and all that sort of stuff, and they're employed at the 1st of March, they will be eligible they'll be an eligible employee for the JobKeeper.
Yep.
If there's some confusion around that, or we need to clarify, please touch base about that. They certainly will be. I suppose just to go back to what Brian was talking about earlier, most of the time it will work out better that they receive the JobKeeper as opposed to the 50% rebate. That is still there. That is still there, by the way.
So just critical, it's the business that needs to be eligible first before we move on to employees. So we've got to pass the turnover tests.
Yeah.
And the other things for the business.
Yes, yeah, and I suppose that's the other thing is if you're not eligible for JobKeeper and you've got apprentices and you meet the other requirements around the apprentices, you're still going to be eligible for that for the 50%. So there's still the ability there. Okay, Brenton has asked, a director who has been paid as an employee on the payroll for the full year, are they classified as an employee or a business participant? My feeling on that, thanks for your question, Brenton, but my fairly confident answer on that is they're an employee, and that another person, if there's another eligible business participant, i.e. a shareholder or another director that's participating in the business, would be eligible for JobKeeper separate to that employee because they're an eligible employee effectively.
Yep.
Do you agree with that, Brian?
I agree. They would come under employee first before going for the business participant.
Yeah. Right. Kate, are the owners, directors of the business eligible for JobKeeper as well as the staff? I think that's probably what we're just talking about there with the business participant. If they're paid a wage, they're an eligible employee. If they're not paid a wage and they're just paid a dividend or a distribution of some sort, as long as they're working within the business, they're eligible as a business participant, but only one per entity on that front. And again, guys, apologies for going over. There's a lot to cover here. We'll be sending this out, so if you want to drop out, please feel free. But by all means, we're happy to keep answering questions. So hang around. Right, Niraj, and thanks for your question again, Niraj. Is March going to be included in the turnover test?
Yes, I'd need to go back and clarify that one, but I think we can look at March in its own right. But I don't believe that allows us to look at the March quarter. Within the slides back there that I had in there, we weren't talking about March, but there's a monthly period in that one where it's talking about, March 2020. So you could use a comparison period of March 2019. So if you actually pass that one at that point in time.
Can't again, to clarify, the quarters start 1st of April to 30 June, so you can't use the March quarter, but you can use the March month, Niraj.
Yep.
Okay. Nolene, thanks for your question. Just clarifying, we are a partnership of 2 active people. Only one partner is eligible for the JobKeeper. Unfortunately, yes, that's correct, Nolene. Only one partner is eligible. We did actually... this is something that's been clarified over the last few weeks. So when it came out initially, there was there was mention of self-employed people. There wasn't a clear thing to say whether both would be eligible or only one. It's only come out and been made clear in the last week or 10 days that only one of those people would be able to be an eligible participant for the business. So yes, partnership. Even if you're both active, you're not going to both be eligible. Only one is eligible. Any agree with that, Brian?
Yep. No, I well answered, Joe.
Cool. Owen, thank you, mate, for your question. What have you seen from banks? How responsive are they to questions, requests for support? I'll give my answer, I suppose, on my experience, and then Brian can give his. I could probably talk forever about this, but banks are trying their best, is what I would say. They are getting smashed, like a lot of industries, and particularly people are aware that getting Financial support is, it's one of the first places you're going to go. They're trying to build things on the fly that the government has put in place over the past month, as well as deal with unprecedented levels of applications and requests for support. So how responsive are they? It depends on the bank, as responsive as they can be. If you have an individual banker, business banker, you're a lot more likely to get responsiveness versus just calling to the pool or going to the pool of assistance. That can take a significant period of quite a few days for someone to get back to you, depending on the bank. But they are certainly, what I will say is when clients are dealing with them, they're certainly understanding of the situation and are going out of their way, the ones that I've dealt with, to try to assist clients to get cash in any way they possibly can. I think I'll leave it there because, as I said, we can keep talking about that. Brian, what are your thoughts?
Yeah, no, I agree, Joe. The banks I've seen have been trying to move as fast as they can on these things and provide as much support, but I haven't had to, I haven't dealt with a huge amount of them. So just from the ones I have, they've been doing what they can as quickly as they can. Don't seem to be throwing up roadblocks. They seem to be trying to find solutions, which is great.
Yeah, which is a bit of a change for the better, which is great. Sharon, thank you for your question. My apprentice wants to work part-time while I'm closed for services. Am I still able to claim JobKeeper for her? Yes. In short, without knowing the whole situation, Sharon, if you're an eligible business and you've met the turnover test and all those sort of things, yes, and she was your apprentice was an employee at 1st of March, and she met that definition of an eligible employee. Yes, you are still able to claim JobKeeper for her. And if you're eligible for that and she's volunteering to reduce her hours, that's okay as well, because I suppose this issue with if the work's not there, the government effectively covers her wage or more than her wage probably if she was part-time for that period of time, and it benefits her and you as well. So yes, without knowing all the details, based on those assumptions, I would say yes, you're able to claim JobKeeper for her.
Yeah, I agree, Joe.
Right. Rayanne, Brian, I'll chuck this one to you. We have a casual employee that has been employed with our company since February 2018. However, due to downturn, we did not require him for a period of 8 months. We never removed him from our payroll as he was still considered an employee. He has worked reasonably consistently since April 2019. Can we claim for him? Oh, gee.
Well, we might need to refer to some other areas in here, but if he's been working consistently since April 19, I'm erring on the side of we're probably going to be able to, because he's a long-term casual of over 12 months. And in that last period of time there of 11 months, he's worked very consistently. It's that 8 months prior to that. So,
I suppose the only consideration there, Brian, is that, of course, that you had to be a long-term employee at long-term casual at 1st of March. So I suppose, and that meant 12 months. And they've been very clear on that. It needs to be minimum 12 months regular work for that employer at that point in time. So if it's not 12 months up to that point and you had that break in between, look, it's one of those ones. They've basically said they're not going to provide any leniency or discretion around this test. They've got the turnover test with the discretion, but this one they've said unless it's cut and dry, that's been working for you consistently for 12 months. Look, I would probably we'll split the difference here. Brian says maybe, and I'll say I don't think they will be eligible. But maybe if we get further facts, Rayanne, and happy to talk to you about that later on and clarify that for you.
Yeah.
But yeah, we'll wait and see.
Good question, Ryan.
Absolutely, it's a bit of a it's one of those scenarios where it's almost like it's right on the borderline, and what happens there? It could go either way. But as I said, the government were very clear on the fact that they were going to be very black and white on that 12-month test. So I suppose it just comes down to the dates, Rayanne. But thanks for your question. Appreciate it. Nolene, no worries. Greg, okay, staff normally get paid weekly. Does it have to become fortnightly? No, again, it probably comes down to what we were talking about earlier, Greg. You just have to show that you paid them $1,500 gross across a fortnight. So monthly, you can split across two fortnights, weekly, you just have to show again that you've spread across those 2 weeks, you paid the $1,500 gross, and you're able to do that. Any thoughts on that, Brian?
No, I completely agree. It's all good. Don't change a thing. Keep going weekly.
Cool. Now it's done this thing again where it's locked me out of the chat for some reason, so you might have to continue for me, Brian.
That was the last of the questions, Joe. We're all good.
Oh, was it?
Yes.
Oh, excellent. Excellent. Oh, that's easy. Well, we only went 37 minutes over, so that's pretty good. So apologies, guys, for going a bit longer. As you said, it's a long one. There's a lot to take in there. Supposed to distill it a little bit. Just come back to us. We expect to be talking to a lot of people over the next a week or so, 2 weeks, to and then further to support through the initial application into May. We expect that. We expect conversations, and we will be making contact with you as well. As we said, we're going to provide that Excel document which enables you to fill in previous data. Just work through it. As Brian said, the ATO is pretty prescriptive on their website around what to do. It sounds onerous, but I think when we get into it and start doing it, it won't be as difficult as it seems. So yeah, I suppose just be patient with it. Be patient with us too. By the way, I suppose for our clients that are on the webinar, we are going to be, as we have been over the last 3 weeks, been really hammered with this stuff. So we will try to continue with our business as usual stuff. But I suppose just we would appreciate the understanding that we are getting a lot of inquiry, and we're trying to provide as much support as we can. So apologies for delay if there is any on your work or on things that we're doing for you.
Yeah. So I was just going to add to that, Joe. Yeah, thanks for your patience, because we've had a host of information released from Treasury and the ATO this week around these things. And as always, when we get a lot of information to help answer questions, it just creates a whole new set of questions that need to work our way through as well. So we're in a busy period at the moment where we've got to test for our eligibility, then we've got to enrol, and then we've got to start the applications. So hopefully it starts to settle down a little bit after that. But yeah, for the next few weeks, there's a few things to do and get through. And it all starts with collecting that data to get that eligibility in there and work through eligible employees. So yeah.
So we will run another webinar next Thursday, again with any further updates. It's probably going to be largely focused around this for the next couple of weeks. If there's any updates or anything that we've discovered on the way through, obviously applying for that starting on Monday. So if you have any questions or anything else you would like to chuck at us, again, feel free to do that before next Thursday. We'd appreciate that. We appreciate your feedback, and we appreciate everyone's effort in getting along and spending an hour and a half on the call or on the webinar with us today. Really appreciate it. And for all the questions that came through, thank you very much.
Beautiful. Okay, well, thanks everybody for your time. We'll see you next week.
Excellent. All right.
Okay.
See ya.
Bye.